In this video, I'll be sharing with you my 111 options trading strategy. This strategy makes money if the stock goes up, down, or sideways. It has a built-in hedge which serves two purposes. Number one, the potential max profit you can make. And number two, which is probably more important, it widens your break-even point in the rare event that the trade goes against you. Now, if this sounds like something that's going to add value to your trading, I would appreciate if you could smash that subscribe button and gently tap that bell notification, as I produce content every single week which teaches you new trading and investing strategies. So we're going to construct this trade using Tesla. Now, looking at Tesla's chart, we can see that it's been on a crazy bull run, doubling in price since January. Looking at the technicals, we can see that Tesla is way overbought with an RSI reading of over 77. We also have this red doji candle signifying potential pause or indecision. This leaves me with a bearish bias on Tesla, as it will either consolidate or sell off in the short term. Now that we have determined our direction, let's jump into Tesla's options chain and construct the 111 trading strategy. So I'm using the tastyworks platform, which in my opinion is the easiest platform to trade options. You can sign up for a tastyworks account for free using the link in the pinned comment down below. So I like to sell options with a 40 to 60 day expiry using the monthly cycle options. You can see that the March monthly cycle has 35 days to go, which is not ideal, but it's close enough for this example. The first one of the 111 strategy is to sell an out the money naked call or put. Given that we're bearish on Tesla, we will be selling a naked call. I decided to sell the 22 delta, which is the 250 strike. You can see here that we will receive a credit of $6.10, and that is our max profit on this trade. Now, we could just sell this naked call, which will be absolutely fine. You can see we have a probability of profit of 86%, which is really high. However, one of the risks with the naked call or put is that if the underlying moves past your strike, you could be in some serious trouble. This is where the second and third one of the 111 strategy comes in. What we do is we use some of the credit we received from the naked option, and we use that to finance an out the money debit spread. The debit spread acts like a hedge that if we get the direction wrong, you have a bigger break even and can potentially make more money than just selling the naked option. So in our example, we bought the 230, 235 debit spread. You can still see that we've entered the trade for an overall credit of $4.90. And what we did, we used some of that premium from the naked call to finance the debit spread. You will also notice that our probability of a profit has increased by 1% to 87%, and our max potential profit has also increased by $990. If you're enjoying this video so far, I would really appreciate if you could drop a like, as it takes time to create these educational videos, and your feedback is vital to ensure I'm creating the right types of videos for you. Now, let's head over to Option Strat, where we can visually see the probability and profitability curve and what happens if Tesla stock price rises or falls. If you want to visually see the outcomes of your own options trading strategies, you can try Option Strat. It's absolutely free using the link in the pinned comment down below. So I've plugged in the three parts of the 111 trading strategy into Option Strat. We have the naked call and the debit spread. With Tesla currently trading at $207, if the price falls, which is our assumption, we will make the credit we received upon entry. So there is no downside risk to this trade. Now, if Tesla continues to rise between 207 and 230, again, we will still make the credit we received on entry. Now, if Tesla rises above $230, this is where the debit spread comes in and works its magic. Now, if Tesla rises past $235, we will realize the full $500 profit off the spread. So our sweet spot in this trade is between 235 and 250, where we will pick up the initial credit. In this example, an option strat is $491, and also the $500 value of that debit spread, resulting in $991 total max profit. Now remember, we don't want Tesla to go up, but the additional benefit of buying a debit spread is that the $500 in value is added to our break-even point, giving us further upside protection. If we hold this position to expiration, our break-even point is at $259.91. Now, let's talk about how we manage this trade. Now, for those who are subscribed and watch my content, you will know that I like to take profits early. Research shows that it reduces your risk by 40% taking profits early. So what I like to do is close the whole position at 50% of the initial credit. If I receive a credit of $2, I will buy it back for $1. Now that's fairly simple, but what if your break even is breached? You have two options at this point. Option one is to close the debit spread for max value and roll your naked option into the next monthly cycle and widen out your strike. You should be able to do this for a credit. If not, you can pay a small debit, which is less than the width of your debit spread. So in our example, we had a $500 max gain on the debit spread. So what you want to do is, if you are rolling for a debit, you want to roll for less than $5. Now, option two is to roll the whole position into the next monthly cycle for a credit. And again, widen out your strikes, so then you'll have more time and chance of being right. You got to remember, this situation will be very rare, and managing your winners at 50% will increase your probability of profit over 90%. I actually placed this trade 2 days ago, but instead of the 250 call strike, I went a bit more aggressive at the 245. I received $568 credit for this position. As predicted, Tesla has now dropped below $200, and I'm nearly at 50% of my target of $284 in just 2 days. I hope this video has added value. If it has, please drop a like and a subscribe, comment down below. Now check out this video on the screen for you, which is another strategy that I walk through, and I should see you guys there on the other side.